Life is set to change. Look, I can't deny the fact that life is set to change. This goes back 4-5 years back. It's probably in our DNA. We started kind of, simulating internally, what if we were a public company? Every month, we have a monthly reporting, right? Very, very serious monthly reporting. We're very serious about our board meetings. We're very serious about our internal audits. Very focused on costs. Very focused on key metrics that people will question us on. But I would be naive to think my life is not going to change.
Why would you want to go public? I mean, actually some analysts have written that there may actually be a problem of plenty given the cash surplus that you already have. So yes, I mean, it brings a certain amount of discipline, but it also brings a lot of gaze, and you will be under constant regulatory hurdles, even as far as your expansion plans are concerned. So why tap the capital markets at all?
There are two reasons to it. One is that in a journey of an organization, there is that point, there is that milestone that comes when you want to, when you list, and that just seems to be the right thing to do. But the other is that as we are building out a business for the next several years to come, right, we can see that we may need to tap capital markets, other funding options.
That a listed company
has avenues
to.
to. And that's that flexibility that the management team will have as and when required. So how we run our business will not change. And the other confidence that I want to give to potential investors is the founders will still own the significant majority of the business. So whether it's their future, whether it is the management team's future, or whether it is the desires of the new investors, they're all kind of aligned.
How do you manage to stay profitable in a sector that is so prone to the vagaries of forex rates, crude oil? I mean, that's 40% of your operational cost.
50%, yeah.
50%. And it's gone from 150 to a 45. How do you ensure you manage the troughs and the crests, so to say?
We started executing this very unique fleet strategy, right? And that fleet strategy was premised on the fact that we would order a large bunch of airplanes, invest in the right technology, the right product.
Right.
Then we'd spread the delivery over a long period of time, right? So it grows along with the opportunity of India. But after that, what we did is, we started doing this very short-term leases, right? We would take the airplanes out of our fleet after 6 years. And 6 years is a brand new airplane in the airline world.
That's right, yes.
A young fleet means lesser fuel burn, lesser maintenance cost, lesser ongoing cost. We don't have any residual risk. We don't have to worry about what happens to the plane after 6 years.
So your operational cost automatically
comes down.
Crude is what? 50% of your cost that you just mentioned.
Yes.
It's dipped from 150 to 45 that we've spoken about. Is this also the most opportune time for you to get into the market?
We didn't think of it that way because when we decided to go public and we went to the banks and appointed the banks, we had no idea that fuel is going to be at $50 a barrel or lower. But definitely, if fuel stays range bound, it has a deep impact and a positive impact on the margins of IndiGo as well as other airlines. By the end of this year, we will start getting our NEOs. The significant thing about the NEO is that the NEOs burn 10 to 15% less fuel than our current 320s. If the fuel spikes, that 10 to 15%.
You have that cushion.
Exactly.
The numbers doing the rounds, at least in the market, is 2,500 crore rupee IPO, a $4 billion valuations, 8 times the market cap of your nearest rival Jet Airways. People say those are very ambitious, so to say. How do you retort?
So, the valuation, to be honest, will be the valuation on that particular day.
True,
so very difficult for us to kind of set a target and
Are markets too volatile? Are they making you nervous right now?
Not nervous, but the fact is that they are volatile.
There is volatility.
But in every volatile market, there will be players who will be in the fundamentally right part of the game. Second point about
being ambitious.
How much we're planning to raise. What we have figured out is that we want to raise about 1,150 crores as primary.
That's right. Okay.
The rest of it is going to be, some shareholders, old management and people who are selling, a little bit being sold by the current founders. And they'll generate whatever they generate at the end of the day, depending
True,
on what the
true.
valuation turns out to be.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.